If you want to make money from the stock market right now, then buying dividend stocks may be a great place to start. In this video, you will learn the basics of dividend investing. Welcome to Money with Markus, where I help you reach financial independence by earning more, saving more, and investing more money. My name is Markus Seppala, and today we're talking about both the investing part and the earning part, because dividends is a great way to earn money directly from your investments. Specifically in this video, I'm going to cover 5 basic questions about dividends. First, what is a dividend? Second, how much money can I make? Third, how do I get paid? Fourth, what does dividend yield mean and how do I use it? And fifth, how do I get started with dividend investing? Stick around to the end of the video where I'm going to share a bonus tip that's going to help you avoid one of the biggest mistakes that new dividend investors make. As always, there's links to everything I'm talking about in the description below. There you can also pick up my financial independence planning spreadsheet completely for free. And if you do want to get started with dividend investing, I have links to additional resources that are going to help you as well. So to begin with, what is a dividend? Well, if you buy shares in a company on the stock exchange, then you own part of the company. It may be a very small part, maybe 1/1,000th, maybe 1/1000th of the company, but you are still part owner of that company. If the company makes a profit, then the company may choose to pay out a portion of that profit to its owners, which includes you as a shareholder. They don't have to pay a dividend, and paying a dividend is only one of 6 things that a company can do with its profits. So paying a dividend is number 1. Number 2 is that they can invest in their business, in research and development, new products, plant and equipment, and such things. Number 3 is that they can pay down their debt. Number 4 is that they can buy other companies, mergers and acquisitions. Number 5 is that they can buy back their own shares that they have previously issued. And number 6 is that they can also do nothing. It's up to the company to decide how they use their money. However, if a company does nothing with a large profit over a long period of time, then after a while the shareholders are going to demand that the company does something. And one of those options that the company has is to pay a dividend to its shareholders. So now that you know what a dividend is, dividend investing simply means that you buy shares in companies that consistently pay a dividend. Now, the dividends that companies pay out, they are never guaranteed. The company can always change the amount of money that they pay out to their shareholders. However, there are certain companies that have a long track record of paying a consistent dividends to the owners, and we're going to talk more about that at the very end of this video. So how much money can you make from dividend investing? Well, I'm going to show you with an example of a stock that I own myself, and that is Johnson & Johnson, ticker symbol J&J. J&J makes pharmaceuticals, medical devices, and consumer goods. For example, Band-Aid is a J&J brand. J&J currently pays a dividend of $4.04 per year. And what that means is that if you own 1 share of J&J, then you will receive $4.04 for this particular year. If you own 100 shares, then you will receive $404 for this year. We're just getting started. If you already got value, hit the like button. Now let's look at how do you get paid as a dividend investor. Many European companies pay a dividend once a year, so that's an annual dividend, whereas many American companies pay a dividend every quarter, so 4 times per year. In the example with Johnson & Johnson, they have that $4.04 dividend on an annual basis. What it means is that they pay $1.01 per share every quarter throughout the year. Getting paid a dividend is super easy. You don't have to do anything. It just gets paid into your brokerage account automatically. Now, when specifically do you get paid? Well, you get paid on the payment date, and the payment date is part of the announcement that the company makes when they announce or declare a dividend. For example, J&J, in their most recent quarterly dividend, they had a payment date of September 8, 2020. But there is one more date that you need to be aware of, and that is the ex-dividend date, or X-date for short. The X-date is the date when the share trades on the market without any rights to dividends. And for J&J, this was August 24, 2020. And what that means in practice is that if you bought the shares before August 24, then you have a right to receive this dividend. If you bought your shares on August 24 or later, then you don't have a right to receive this particular dividend. But of course, if you keep holding your shares, you will still receive the next dividend in the next quarter. Now let's talk about the concept of dividend yield. If you go into your Robinhood app or any other stock trading platform that you may use, you probably won't see the dividend amount, the $4.04 that we mentioned, but instead you will see a dividend yield. The dividend yield is a helpful number when you want to compare different potential investments and how much you can earn from them. The dividend yield is calculated by taking the dividend amount and dividing it with the share price at the moment. If we go back to our J&J example, the dividend, as we saw before, at the moment is $4.04 per year, and the share price at the moment is $145. If we calculate the dividend yield by taking that 404 and divide it by 145, we get the dividend yield of 2.8%. So you are getting a return of 2.8% from this particular investment if we look at only the dividends. Now, is this a good thing or a bad thing? Well, it depends. If you compare it to a bank account, for example, you are probably not going to get 2.8% anywhere in the world at the moment. But maybe it's better to compare it to a different company. So let's compare it to another one of these classic dividend-paying companies, namely Coca-Cola. The ticker symbol for Coca-Cola is KO. Coke currently pays a dividend of $1.64 per year. Now that 164 number is obviously lower than the $4.04 number that we saw for J&J, but also keep in mind that Coke shares are cheaper than J&J shares. If we calculate the dividend yield for Coke, we're going to take that 164 divided by $49, and we will see that we actually get a dividend yield of 3.3%. So that means that the dividend yield on Coke is currently 20% higher than the dividend yield on J&J. So what that means is that dividend yield is a great tool for comparing the comparative returns for two different potential investments. Hit like if you got value. Let me illustrate the difference between these two companies with a real-life example. If you have $10,000 to invest, you will get different numbers of shares by buying J&J or buying Coke. How many shares can you get exactly? Well, let's take that 10,000 and divide it by the J&J share price, 145, and you will see that you can buy 68 shares with that $10,000. And with Coke, the share price is currently $49. With those $10,000, you can actually buy 204 shares of Coke. Now let's calculate the dividend amount. For J&J, you have your dividend amount per share, which is $4.04. Multiply that by your 68 shares, and you will get a total dividend of $275 per year. And for Coca-Cola, you have your 204 shares. Each of them pays a dividend of $1.64. You multiply 1.64 with 204, and you get a total dividend of $335. So this calculation shows you the importance of dividend yield when you're comparing different stocks. There is one very important thing to keep in mind though when you're using dividend yield. Remember that dividends are paid out as a fixed amount. Dividends are never paid out as a percentage of the share price. This percentage number, this dividend yield, is something that we calculate as a convenience, but the actual amount that you will receive will be a fixed amount determined each year by the company. So let's take that 4.04 dividend from J&J. If the share price changes, then the dividend yield also changes, but within the year, the amount that you will receive for each J&J share does not change. A very important distinction between dividend yield and dividend amount. Dividend amount is really helpful when you're planning your income, and dividend yield is really helpful when you're comparing different investments to each other. Now let's talk about what do you have to do to get started with dividend investing. Well, there's only 3 steps. Buy the stocks, don't sell them, and get the money. It is a truly passive form of income, and you don't actually have to do anything. Often when you hear about passive income, it may get a little bit of a bad reputation because there's lots of scams and fake gurus trying to sell you on ideas of passive income. So let me tell you what you don't need to do to get started with dividend investment. You don't need to buy a book, you don't need to buy a course, you don't need to sign up for a seminar. If somebody tells you that they're going to help you realize vast amounts of passive income, it's probably a scam and you should probably stay away. Because for dividend investing, all the information is available for free online. You can find out exactly how much all of these companies are paying in dividend, and you can make your decisions based on that. In the description below, I have links to additional free resources that are going to help you when you start investing in dividend stocks. I also have links to some good reputable brokers where you can actually keep your shares and start receiving your dividend income. In just a moment, I'm going to move over to my bonus tip. But if you got some value from this video already, please consider subscribing to my channel for more tips on how you can build your wealth and become financially independent. And here's the bonus tip, and it is about taxes. When you start making dividend income, in most places, in most circumstances, you will have to pay taxes on that income. One part of it is the tax that you may have to pay when you do your tax return. Another type of tax is a withholding tax that your broker will automatically withhold from you. This can get incredibly complicated, especially if you're buying shares in different countries. So the bonus tip is to make sure that you understand the basics of dividend taxation for your particular situation. Don't make the mistake of taking all that dividend income that you're getting and just spending it, because you will most likely have to pay taxes on some of it. I mentioned before that there are companies that have a long track record of paying good dividends. We call them dividend aristocrats. To learn more about the dividend aristocrats, click the video on the screen now. Also remember to grab my free financial independence spreadsheet from the links below. Thank you for watching. I will see you in the next video.